All right, so today let's take a deep dive into something pretty interesting. Okta's Q3 2025 earnings report.
Yeah.
We're going to go beyond just like the headlines. We've got their official press release and SEC filing to really see, what's going on with this leading identity security company.
Yeah, it's like we're getting to peek behind the curtain and see how they're handling this crazy economy right now.
Exactly. And the first thing that really pops out at me is this 14% year-over-year revenue growth. That brings them to a cool $665 million. And their subscription revenue also saw a 14% jump. Not too shabby considering the challenging macro environment, as they put it. It's like the polite way of saying the economy is being, well, a bit of a grump.
Yeah, and what's impressive to me is that this growth, it's not just a one-off thing. Okta's CEO, he made a point of highlighting their investments, specifically their investments in partner ecosystems, the public sector, and there's big enterprise-level customers. It seems like they're not putting all their eggs in one basket, which I think makes them more resilient when the market, does its thing.
That makes a lot of sense. Like they're building a diversified portfolio, but for growth drivers.
Yeah.
I'm curious what stands out to you the most about these areas? Any of them particularly, surprising or interesting to you?
Well, the public sector focus, that's a smart move in my opinion. Governments are getting more and more concerned about cybersecurity every day. And Okta, they're really well positioned to capitalize on that. I mean, it's a market with huge potential for growth.
Yeah, definitely. Now let's talk about a metric that really stood out to me. Remaining performance obligations, or RPO. Okta's saw a 19% year-over-year jump, which brought them to $3.659 billion. That's a pretty big number.
Yeah, RPO, it basically represents Okta's future contracted revenue. It's money they're already set to receive. This big increase, it's not just about closing deals today. It shows confidence in their ability to, keep those customers happy and using their services.
Yeah, like a massive backlog of pre-orders. You can practically hear the investors breathing a sigh of relief. Now let's take a look at their profitability. They reported $138 million in non-GAAP operating income. That's 21% of their total revenue, plus a hefty $154 million in free cash flow. Those are some pretty healthy numbers.
Definitely. That free cash flow, it's crucial. It gives them the flexibility to invest in growth initiatives, explore strategic acquisitions, or even, reward their shareholders. It's like having this financial cushion so they can make big moves and weather any storms.
So before we go any further, can you quickly explain this whole non-GAAP thing?
Yeah.
Why do companies use these alternative metrics?
Sure. Non-GAAP metrics, they adjust for certain expenses. Expenses that might not really show the true operating performance of the business. For example, they often exclude things like stock-based compensation or one-time costs from acquisitions. It basically lets investors compare apples to apples, both across different periods and against their competitors.
So it's like looking at a filtered version of their financials to see how they're doing at their core. But it's important to remember that these metrics can be manipulated, Arch. So we always have to be aware of what's not included and why. Now, the strong performance, you can also see it in their financial outlook. They've given guidance for Q4 and the full fiscal year 2025. And while they acknowledge the economic challenges, that are going on, they're still projecting growth, which is encouraging.
What's interesting to me is that they're keeping that focus on profitability. Even with those anticipated challenges, it's not just growth at any cost. They're going for sustainable, profitable growth.
It's a tough balance, but it seems like it's working for them. Okta is walking that tightrope between ambition and being cautious. Definitely something to watch out for.
Absolutely. Now, there's one more thing from their financial statements that I wanted to point out. It's a little complicated, but it caught my eye because it might give us some interesting insights into their strategy. During the quarter, they repurchased some of their convertible senior notes, which actually resulted in a $16 million gain.
Okay, break that down for us. Convertible notes, what are those, and why would they buy them back?
So imagine a convertible note, like a mix between a bond and a stock option. A company will issue these notes to borrow money, but the lender can choose to convert those notes into company stock later, at a price they decide on beforehand. Now, Okta's choice to buy back some of those notes, it could mean a few things. Maybe they think their stock is undervalued right now, so buying back the notes is a better deal than having them turned into more expensive shares later.
Ah, I see. So it's like a strategic move based on how confident they are in their stock's future performance.
Exactly. It shows they believe their stock is going in the right direction.
That's fascinating. Makes you wonder what else we could find in these financial statements.
There's always more to uncover. But first, maybe we should take a step back and look at the bigger picture here. What is this strong performance combined with their growth initiatives and this financial move? What does it all tell us about Okta's overall place in the identity security market?
That's a great question, and it's one we'll definitely dig into a little later. We're back and ready to dig a little deeper into Okta's, position in the identity security market. We've seen some really strong financial performance, those smart growth initiatives, and even, a little bit of strategic maneuvering with those convertible notes.
Yeah, it's clear to me that they're playing the long game here, not just chasing those quick wins. Remember those growth drivers we talked about before? The partner ecosystem, the public sector, and those large enterprise customers. All of those are moves that really solidify their place as a leader.
Yeah, like you're building a fortress around the business, making themselves, essential to a whole range of customers.
Yeah.
But even with a strong foundation, they can't just stand still, right?
Exactly. The cybersecurity landscape, it's always changing. There are new threats popping up all the time. Okta, they need to stay ahead of the curve, constantly innovating and anticipating their customers' needs. And that's where their strong financial position really comes in. It gives them the resources to invest in R&D, explore those new technologies, and maybe even acquire companies that can make their offerings even better.
Like a war chest for the future of cybersecurity. But even the strongest fortress can have a few cracks, right? Looking closely at their financial statements, I noticed a little dip in their operating cash flow. Compared to this time last year, it's still a healthy number, but it went down from 27% of total revenue to 24%. Does that raise any red flags for you?
It's definitely something to watch. While a small decrease isn't necessarily a bad sign, it's worth figuring out why it happened. Could be timing of payments, changes in working capital, or even some strategic investments that haven't paid off yet.
So not a sign of trouble, but more like a small adjustment.
Exactly. Like they're slightly changing course to deal with the current economic, climate. And it's worth noting that their free cash flow, which we talked about earlier, it's still strong. This means their core business is still generating plenty of cash.
It's good to see they have that flexibility. Now, another thing that stood out to me was that big increase in their deferred revenue, both the current and non-current categories. What does this tell us about their momentum?
So deferred revenue, that's basically payments they've already gotten for services they haven't provided yet. Think of it like a pipeline of future earnings. This increase could mean a few good things. Maybe they're signing longer contracts, offering upfront discounts to get new customers, or seeing a surge in pre-orders for new stuff.
So it's not just about the revenue they're making now, but also what they've secured for the future. It's a good sign of continued growth and customer confidence.
Definitely. It's like their customers are saying, hey, we believe in what you're doing and we're going to stick with you.
Now let's talk about something investors always care about, profitability. We already mentioned their strong operating income and free cash flow, but let's look a little closer at their non-GAAP metrics. I'm always a little cautious with these adjusted numbers because sometimes they're used to make things look better than they really are.
Right. You're right to be cautious. Non-GAAP metrics, they can be manipulated. So it's important to know what they're not including and why. In Okta's case, they're mainly adjusting for stock-based compensation, amortization of acquired intangibles, and a few other non-recurring expenses.
So kind of like filtering out some of the noise to see their underlying, efficiency.
Exactly. And when you look at their non-GAAP net income and earnings per share, we see some impressive growth. They're beating their profitability targets, which shows they're being financially disciplined, especially in a moment where lots of tech companies are just focused on growth.
Okta seems to be striking that balance, investing for the future and keeping a healthy bottom line, like building a rocket ship for growth, but making sure it has enough fuel to get there.
That's a great way to put it. They're thinking about the whole journey.
So I'd love to get your take on this. Looking at everything together, what does Okta's Q3 earnings report tell us about their future? Are they on track to keep this up, or are there some potential problems ahead?
That's the big question, isn't it? Based on what we've seen, I think they're in a really strong position. They're showing robust growth. They're profitable. They have a solid financial base. And they're strategically positioned in a growing market.
Like they've found that sweet spot in a tough environment. But like you said, the cybersecurity landscape is always changing.
Right. There are always potential challenges, new competitors, evolving threats, unpredictable events around the world. But Okta seems to be approaching all of this with a good mix of confidence and caution. They're not getting complacent, but they're not panicking either.
Like they're navigating uncharted waters, adjusting to catch the wind, but also keeping an eye out for danger.
And that ability to adapt, that's crucial in a market like this. Okta's ability to adapt, innovate, and respond to challenges. That's what will determine their long-term success.
We've covered a lot today exploring all the ins and outs of Okta's Q3 earnings report. It's been a fascinating deep dive.
Definitely. We've looked at their financials, broken down their strategic decisions,
Uh-huh.
and hopefully given you a better understanding of where they stand in the identity security world.
But before we wrap up, I want to touch on something that often gets missed in these financial deep dives: the human element. Behind all these numbers, there are real people. Okta's employees, their customers, their partners, and of course the people who use their services every day. It's easy to get, caught up in the balance sheets and income statements, but at the end of the day, a company's success really comes down to the people.
Oh, absolutely. You've got the engineers who are building those, innovative solutions, the sales teams making those important partnerships, and the customer support staff making sure everything runs smoothly. They're really the backbone of any company.
And we can't forget about the customers themselves. The businesses and organizations trusting Okta with their security, their satisfaction, their loyalty, their feedback. That's what drives Okta's growth.
It's like this, give and take relationship. Okta's providing this crucial service, and their customers, they're validating their approach and pushing them to keep innovating. Yeah.
It's a cycle that keeps them moving forward. And beyond just their immediate ecosystem, think about the bigger impact Okta's having on our digital lives. Their technology lets us access all these online platforms and services securely. It protects our data and keeps our online interactions safe.
Yeah, in a way, they're kind of like the unsung heroes of, the digital age,
Yeah.
working behind the scenes to make sure everything's secure so we can work, play, and connect online safely.
It's like they're building the bridges that connect us all online. But making sure those bridges are strong and secure and reliable, that's a pretty big responsibility.
It is. And it's only going to get bigger as our world becomes even more digital.
So as we wrap up this deep dive into Okta's Q3 earnings report, I want to leave you with this thought. Beyond the financials, the strategies, and the market position, remember the people.
It's a good reminder that even in the world of, finance and tech, it's people that really matter.
Okta's journey, it's definitely not over. We're excited to see what they do next, and we'll be back to break it all down for you when the next report comes out.
Until then, everyone stay curious, stay informed, and stay secure.